And for the upcoming trading session, Monday, August 4th, you can see that I have the economic calendar in front of you. And we start with the Japanese monetary base year over year, the monetary base end of period for July as well. Out of Japan, we do not expect much in the way of market moving effects, and quite frankly believe that it's really going to be, at least in Japan, about the ability to react to the non-farm payroll numbers missing slightly in the United States. Remember, they have not had a chance to react to that, so it's possible that we get some type of pullback in the Nikkei as the number was less than exciting. The 15,500 yen level should be supportive all the way down to 15,400 yen, so a pullback's healthy. We still believe that the Nikkei looks like a buy, but maybe we need to pull back a little bit and find some support, in other words, to bring the momentum back to the upside. The next announcements come out of New Zealand and Australia, and they are of relatively minor importance. Retail sales comes out of Australia. We are anticipating about 1.3, but really at the end of the day, it's not as big of a deal because we have the RBA announcement and recent minutes to pay attention to, which is much more important than retail sales overall. Really, the first announcement that we like looking at, and it is a regional announcement unfortunately, is the Swiss PMI. The market, we think, will move the US dollar versus the Swiss franc pair, perhaps the SMI if you have the ability to trade that. It's a very regional number. Anything below 50 will send money flowing from Switzerland into the US dollar. That could potentially be a market moving event, at least in that particular market. We have the UK construction PMI. We're looking for about 63, but really at the end of the day, unless we miss by about 5 or 6 points in one direction or the other, probably not going to make a huge difference. Although, if it's better than anticipated, expect a strengthening British pound and FTSE. And if it's weaker, then of course expect a weaker FTSE and a British pound. The British pound is testing support right now at about 1.68, so it's been sold off rather drastically. So a strong number here could give us a little bit of support in the pound-dollar pair. The US ISM number coming out of New York probably won't move the market, but it will be something to pay attention to for stock markets in America, simply because the S&P 500 had a pretty violent day on Friday, but we're still essentially hugging an uptrend line, so that could give us a catalyst to move in one direction or the other. Speaking of the aforementioned S&P 500, you can see that yesterday's chart that we had drawn with the uptrend line did in fact hold. There's that little bit of sideways support, whatever here. That being the case, it's not a huge surprise. We broke down. It's a little bit of a false breakout, but quite frankly, we need to see the top of this range cleared, which is about 1938 or so, before we're comfortable buying. Most certainly still in an uptrend, though. A break of the lows could send us down to about 1900. Looks like a very technical day in the S&P. The FTSE, on the other hand, did fall pretty significantly during the day, but we also had a pretty significant bounce as well. Look for those construction PMI numbers to possibly give us a boost as we continue to just chop around overall. There's a lot of support below, so really it's kind of difficult to short here, especially after seeing, we did bounce 60 points. It's significant towards the end of the day, so it is a bit difficult to get too bearish at this moment. The British pound, as you can see, has broken down below the trend line. However, we also find ourselves with horizontal support right here at 168. So if it's going to make a saving move, it's going to be now, or we're going to go down to the 167 handle. Again, look for the construction PMI numbers to possibly push the market around, but there is a lot of support below here, and we are pretty much by any metric oversold at this point, so it'll be interesting to see how it plays out. Probably a volatile market with a downward bias, but we think short-term downward bias will probably lead to longer-term buying, possibly. We have to wait to see what the daily candle brings. And looking in the euro dollar, you can see that we rose during the course of the day, but this positive candle was kind of predicated by a couple of hammers here. Not a huge surprise. We still think there's a ton of resistance at 135, so really we welcome a rally. Think that somewhere near 135 we should see the sellers come back in. Above 135, maybe a clearance of 135.50 would be enough for us to start buying and perhaps aiming to the previous resistance barrier 137, but right now that doesn't seem very likely because even though the candle was pretty impressive on Friday, at the end of the day it's a blip on a very nasty trend to the downside. And with that, that is a look at the August 4th trading session.